Blast from the money past. Gold compared to wheat, to corn, to beef, to real estate, the hyperinflating dollars. Cost of living is increasing. So, where does it go from here for everything we buy? Starting off here with the gold to wheat ratio. Now, the 1 ounce of gold would buy you how many bushels of wheat? Now, there's a cycle in this too, and this channel is all about cycles. 42 to 44 year cycle in the gold wheat ratio. Chart ends here 2024. It's just a couple years ago, but that has definitely moved northward because the price of gold has increased substantially since 2024, nearly doubling. So the amount of wheat you could buy. Now you notice the inverse in times past: Tambora eruption, 1810, World War One, World War Two. Just saying, if there's World War III, this is going to substantially drop and wheat's going to get incredibly more expensive over time since 1790 on the chart. But now we need to add in the green revolution and the increases in crop yields per acre. As you notice from, say, 1865 or so forward all the way to about 1950, crop yields remained the same. But after we got into the green revolution, nitrogenous fertilizers solidly 1950s and 60s, you'll see that just continues upward. Interesting, the trend on that with gold wheat ratio, as wheat becomes cheaper and cheaper and cheaper, gold's becoming more and more expensive. And as always through history, there's a rollover in these charts. Nothing continues to go up forever. So if there was another conflict, disruption, oil prices, something, this gold wheat ratio is definitely going to contract back down again, meaning that the wheat price is going to get much more expensive. Now, when it does in the future at some time, would you be prepared for this? That's really the question, because it seems these things, the events can just come out of the blue. That's why they're called black swan events. It is like, whoosh, it wasn't forecast to happen, and suddenly it does happen. So this is just one indicator, and let's take a look at a couple others. You're going to be fascinated by the ancient history, historical correlations of how many cows you could buy for an ounce of silver, 7 ounces of silver, an ounce of gold, but then also with the corn and the different foods that we eat and money as well. And when I talk about rollovers, here's a perfect example: stocks, gold, silver, home prices, copper, platinum, money markets, US debt, deficit spending, household debt, record high, all of those at the same time. All it means is the fiat currency is depreciating again. Again, it's a cycle. And happy new year of the fire horse. And I think the imagery here will show you exactly what type of year is in store for us with the fire horse, the Huoma. Hot, hot, and fast, and changes all around. Because these cycles come and go. It's just our lineage and history over the last 8,000 years. We're just in a smaller cycle comparatively to looking over 8,000 years of time. But this does seem to be something tremendous on our doorstep, something in the multi-thousand year cycle. I mean, the pounding of time against our society, against our structure of the world continues unabated. Eventually, it erodes that very bedrock of what was considered stability. And I think we're here right now. A little more information if you want to agree or disagree. Talking about cattle versus gold, and Ransom and I talked about this on our show a couple months back as well. 1 ounce of gold will buy you how many head of cattle here? Now, through history, there's some sort of variance, but it does seem to be in that band of around a half to maybe one. And it seems that we've broken out of that recently because gold's gotten so expensive. But going back to the year 1900 through present, you can see approximately 1 ounce of gold, how many head? This is a full cow. I think it was 1,200 pounds measured. And this chart here from the Federal Reserve, global price of beef, steady-ish. We get that peak 2015, 2019, but then it really starts climbing after that 2019-20 period. And it just, look at that far right of the chart, it's continuing upward. Now, what does match with that, you might say? Oh, the price of gold, historical here. You can see it had some sort of range that wasn't untouched so much to 2019. And then suddenly, what do we see? Gold starts to run away. Now, if we're going to put these and overlay them, the rules of money are being rewritten right in front of your eyes. The institutions that control the financial system aren't waiting, warning, or wishing. They're acting. They're buying gold and silver in an unprecedented pace. Seems they're preparing for something. The question is, are you? For nearly a decade, Noble Gold Investments has helped thousands of people protect their wealth with physical gold and silver. As the world shifts to hard assets, the window to act is closing. So let Noble Gold show you how simple it is to protect yourself and your family. While everyone else is reacting to the news, Noble Gold clients are positioned. They understand that when the rules change, you need assets that don't depend on the system. Visit 2030gold.com and download your free wealth protection kit today. That's 2030gold.com. The rules are changing. Make sure you're ready. And the February bonus for new qualified accounts, the 3-ounce American Virtues Independent Silver Round. Again, that's 2030gold.com. Click on that link in the description box below. It's kind of simple math at this point. Beef continues to go up, gold continues to go up. So the question would be, how much higher will each of these go? And can you afford it as it continues upward for both? That's the thing. The gold forecast prices for, from Goldman Sachs to JP Morgan, Barclays, anywhere in between, they're talking like $8,000, $10,000 gold. Where does this take the price of beef and wheat? You start to look at some of these things and go, well, just the basic staples of grains and meat following this historical, correlation between metals, whether it be silver or gold, and also what you're going to pay for it. It seems like it's going to get a little bit sticky here. Which brings me to our favorite hyperinflationary Weimar Republic. I'm going to smash a couple charts together for you here. You can see the trajectory from 1918. We get that first spike, comes down 1920. It spikes again, 23 in the middle of that. And then we get our final runaway. People are really noticing it around December of 1922. And you get that last pullback and whoosh, it goes to the races forever. So I will present you with the silver chart here on the right side of just currently compared to what we see. Now, my look at this might be, we are entering the third leg up here. This is not the hyperinflationary spike. This would be the 1922 December to 1923 spike that we're experiencing, because we did get a pullback from that. What I mean is the third spike here, and we did pull back from, nearly 120 all the way back to say 80 or 70 even. So that would give us that third spike that we saw on the chart there. And here's the Weimar Republic hyperinflation. This is German gold marks, and it inflated from one gold mark all the way to 1 trillion in their event. And you can see the subsequent triple spikes there. Now, I want to do this same thing with that, a little bit different chart. So you can definitely see the triple spikes and the pullbacks before it really ran away to the highs. So again, would you think that this would be the third pullback before we really get into hyperinflating prices? Because this is the thing that a lot of people are trying to figure out. Is this truly the third pullback that we're seeing? Even though it seems it went really high near 120 and then it came back in the 70s through manipulation on the paper markets. If this is indeed just that third pullback, then there's a long way to run. And again, that would be reflective of the food prices and what you'll pay at supermarkets. This is the most important thing. Revolutions, overthrows always start with hungry people and the opulences of the elite that are noticeable, but then things for the average person gets, unaffordable. Just history. I would encourage you to go back to France, for an example. Take a look at that. Perfect, snapshot of today's world. Go back to French 1700s. And I think there's a lot of, equivalency there. And another indicator of something, maybe not so right, is left side. Look how much gold the central banks are buying compared to how much is selling. This is from 2020 to 2025. It's a 5-year snapshot chart here. So you can see who is buying the most gold. Now, if the Philippines is selling the most and they're selling 65 tons, and China bought 356 tons or 357, then there's an exponential curve of buyers versus sellers. And especially even let's come down away at the very bottom, the UAE. They bought 53 tons of gold. Switzerland sold 6. I mean, you're looking at multiples there on every single category of selling. So, what is it with all the gold purchasing? And somebody said, David, surprise me with something gold besides gold bars and gold coins. Here you go. Straight from 1715. Gold inlaid shoes for the royalty. Huh. Challenge met. Thank you so much for the comment. Please leave your comments below. I do read them and I'll take up some of these challenges for you. Oh, back to the cattle and the gold ratios. I got some historical here for you. I think you might like this. So our current 2026, let's say gold even 5,000 or let's say 3,600 a head. And again, 1,200 pounds is pretty much the average that we're trying to match all these pricings with. So it could be 1,300 pound, 1,100 pound ratio, roughly 1.6 to 2 cows for an ounce of gold, which stays in the historical band of 1 to 3. So I thought I like historical bands. Let's take a look at the Viking/Nordic. This is 800 AD to 1100 AD. Animal husbandry on Greenland, what their ratio was. So 2 to 4 cows per ounce of gold. And here's what's interesting. 8 ounces of silver equals 4 cows, 1 ounce of gold. So the gold silver ratio was poundingly high at this point. So again, we get somewhere in that 1 to 4 again. Going to roll you off to the ancient Roman era. Temple of Saturn, for those of you interested in the archaeology and the unburying of previously buried remnants. Here you go. Temple of Saturn, ancient Rome. Now, their weight measurement obviously was not ounces at that time. It was called an Arius, 7 to 8 grams of gold. And if we do the scaling up to 31 grams, then roughly 1 to 4 cows per ounce. Now, that had to have a stipulation with it, a good breeding or good milking cow in the market. So again, it's not just buying a scrappy old cow out there. Let's go to ancient Greece. Ancient Greece for a moment. Beautiful here. Now, you notice the columns had moved from actual figures into just straight up marble. That there was a step down in architecture and design from the ancient Greeks to the Romans. Notice that. And going back, pre 2,000 years ago, gold was a little more scarce and a little more valuable. So they were more using a silver to cow ratio at that point. 7 ounces of silver for 1 cow. Gold to silver ratio, even at that time, was 10, maybe 13 to 1. And we've seen some gold ratios again in the north, so right around 6 to 1. Now let's jump up to pre-World War II Germany. Here's Dresden for you before the firebombing. Pre-World War II, 1930s image taken out of a cathedral. Look how beautiful this place is before it was completely destroyed. All the cities were like that. Key historical data points. And we're going to jump back to the US, but post-World War II has its own gold fix at $35 an ounce down there. So early 1800s, gold was about 20 bucks an ounce. Let's round it up. And with that, you could get 0.8 to 2 cows per ounce, depending on which area you were. Obviously, you're out in Texas, you can get a far better bargain than if you're, somewhere where they had to move those to. Now, 1913, as the Federal Reserve was formed, cows were about $18 to $20 a head. Gold still is pretty much at $20 an ounce. So you might get a little better bargain, maybe 2.5 head per ounce. Here's the crazy thing. In the Great Depression, economic activity crashed so low that you could pick up a full beef, a full head for $3 to $6. And at gold sitting at around 35, this is an unusual one in history. You could get 5 to 9 head of cattle for a single ounce of gold. And then post-World War II, obviously our gold fixed at 35 bucks an ounce. Cows right then at that point were 20 to 50 a head. So it gives you a little less than 2. And it shows through history that things do remain relatively stable unless they come to a crisis point. Now, again, if you had metals and you were at that crisis point, what could you convert that to? Now, reading more, which I'll bring in the next couple of videos, real estate followed the very same thing. There were some incredible bargains to be had with the price of the house or real estate ratio of 1 ounce of gold to purchase a family home. Like it skewed incredibly during the Great Depression. Wartime, it skews incredibly as well. So there are times where you could take that gold physical piece and trade it in for something, double or triple the amount of the normal value that you could get out of something during these circumstances. As this gold price continues to go forward, and I am saying absolutely every central bank in the world, all the major, banks that you would consider like JP Morgan, Chase, Bank of America, uh, anywhere else outside Bank of England, any of the central bank, they're all saying gold price going up. So it ranges between 7,500 and 10,000 is the call for gold moving forward in the next year too. With this being said, will we continue to receive the same very cheap food, or will this skew back and something will pull those ratios down where the price of everything we're buying actually increases? And how you protect against that? It's more the question. History books full of ideas on taking advantage of it if something were to come down. And I want to say take advantage, I don't mean scam it out. I mean, take advantage of that ratio, but also help the people that are in dire situation. Like if you're going to be able to get 3 farms for an ounce of gold, keep the people on the farm. Don't kick them off the farm. Keep them there as productive, parts of the community. That's the whole thing. Bank's going to evict them off, and you're going to have nobody farming the land. It's better for you to take an ounce of gold, convert it, take a full farm, 2 farms, keep it. That's yours, but keep the families there. Help the community out. You don't want people evicted during these times when you might need them for, helping out in the community for whatever it is. Because when prices get that high, there's going to be a lot of things that are going to break. We're going to go back really regional here during these higher inflated times. And the biggest question is that third spike that we're just encountering right now where silver went up, came back down in the 70s, around 80. Again, is that the final before it really starts going north? And if it does, then hold on to a clothesline and a hurricane, because it's going to be tight at that point, and a lot of people are going to feel it. And this is just another repeat in history. It's just another cycle. So think about getting some storable foods right now. The 1 week food supply, My Patriot Supply and Adapt 2030, 1 week, 7 days, get you through. They got a 3-day food supply as well. Easy to start. Put your toe in the water right there to 3-day food supply. That link's in the description box below. I do appreciate watching. Please share with your friends and family. Help that algorithm and spread this video further than it would on its own algorithm reach. And I'll see you next time. Bye for now.